Catch a falling knife. That's dangerous, isn't it? It is. It's certainly dangerous. The market is falling hard. We're down, oh boy, let's see, from the top of the day, at least from the futures point of view, we were as high as 39.50 or thereabouts. And the bottom, we were at 38.07. Wow. 140 points, 140 plus points. We're up a little bit off of that bottom right now at, come on, get out of the way. Get out of the way. 38.40. So we're at, top is 38.49. So we're only down 109 points now. Now, here's the thing. We didn't know how to play this. This is a falling knife scenario. There is no good trade. You can only guess at where the market might end up. So we were picking round numbers like 3,800, 3,850, 3,750, and going with that. But doing it so far out of the money that the trades were cost very little. Now we put them on kind of early. Probably should have waited, but still, you could have made a few bucks here or there. And I know that a lot of members did turn in, $2 or $3 on their trade. That's $200 or $300. But hold with the hopes that it would go all the way to expiration and pin your trade, or there's really no way to tell when you have such a free fall in the market, and it's almost not even worth trying. Now, of course, the long shot is always worth trying. I mean, if you can put up 60, 70 bucks to make a couple of thousand, why wouldn't you? Of course you would. And even if you can come out of it short and only make a few $100s, that's still a darn good trading day. So that's how we approached it. Very little analysis, because right now where the market is in free fall, there is no analysis down here. It's going down, and by all looks, it could go down quite a bit more. I think the Fed has totally underestimated just how bad things are, as they normally do. If you look back at the great crash of 2008, 2009, you'll find that even then, days before the crash started, people were thinking that, no, this market is just going to keep on going up. There's no bad news. We're just sailing away. As if nobody knew. There were a few that knew, and they knew very well. And this time around, there are more people in the know that are woke from a financial point of view. They have, they've been there before. And so it's not hard to recognize that the crisis that we're in now is potentially much, much worse than the 2008 crisis. Our debt is way higher. Our exposure is way greater. And we have bubbles in multiple industries, not just including the mortgage industry, but the credit industry for sure. It's crazy, absolutely crazy. So now the question is, where are we going to land? There's a little bit of volatility here down at the bottom. Some people thinking that, maybe the PPT is going to save our arse. The PPT being the plunge protection team that, I don't know if it's a fictitious entity or not, but there always seems to be this, this savior when the market is about to totally tank to get there and try to elevate it. Of course, they have the circuit breakers that they could always employ, but there you need a market to go down about 10%, and we're not anywhere close to that. So what do we do for a final hour trade? I think it's really the same strategy. Pick a round number. In this case, I would say 3,800 is probably a good round number. You can probably get and don't spend a lot of money on it. There's really no need to. Right now, let's see what we can get. So here's the falling off the cliff. Came down, way down here. I had to invoke the cough button, still suffering. Almost came down to 3,800. A little bit of a bounce, but I think it's going to get its mojo on. We could go all the way down to 38 or 37.50. I really wouldn't put it past it. I mean, we could do a little roll over here. We still have an hour left. Well, almost an hour left. But I would say, even if you chose 3,800 as your short strikes, if price passes through there, you're going to make some profit. You're going to make some profit. And if it approaches, in any event, you can put on such a low probability or a low cost trade, I should say, that if price comes anywhere near that butterfly, you're going to make some money. So let's take a look at what that might look like. So I already have one way out here at 37.50. And look, it cost, let's see, 5 cents. 5 cents for that trade. Let's put one at 3,800. Let's try 37.75. Well, no, let's go to 3,800. Let's see what that will give us right now. 37.80 and 38.20. Well, that's $3 and $3. That's pretty expensive. So I wouldn't take that trade. There's no way I would take that trade right now. Now I might go down to. Let's go down to 37.75. We'll make that 20 wide. All right, so now we're talking 90 cents. Now there's a good trade. There's a halfway decent trade. If we get any kind of movement into this, we could easily make 2 or 3 times our money. And sure, you can afford to throw $90 at the casino, can't you? So, this is I want to take this seriously, but on a day like today, it is hard to put on a serious trade with any kind of serious analysis, and this is about as serious as you can get. It's almost impossible to catch a falling knife. Okay, so we got a question here. What does the volume profile say from Finance ABCs? Well, here's the problem. The last time we had any volume to read off of, it was over a year ago. So let's take a look at that. We'll put on a daily chart. We have to squeeze to see where we were a year ago. So all the way back here. So the most prominent feature is obviously T0, but we've blasted through there. And this goes all the way back to March, the end of March of last year. Now, are there institutions and others that are still holding positions there, and is that impactful on today's market? The answer is there's a possibility. It's small, but there is a possibility. So I don't know that volume profile this far away is going to be that useful to us. However, I'm sure, well, the way I'm sure is just by observing the behavior of the market when you extend the profile out from all the way from back there, and then how the market behaves on those edges of those nodes and LVNs. And it's still, for whatever reason, whether there are still positions or institutions that are defending those levels, they still exist. And you can see that in the behavior. So for instance here, we have a very low point in the market right here on this LVN sitting at 38.17. Obviously had some impact, and the same thing up here at 38.61. So we came down, bounced off of that, came up to, well, all the way up to T1, came all the way back down, bounced off of, well, once we bounced off of 38.61 again, and then came back up, and then bounced off of 38.16. Now, it's hard to see or hard to make a case that there's actually something there, but there is. There are features that we would have normally have marked off, even in a relatively new market, and these things are well over a year old, yet they're still carrying some sort of gravitas, influence on price as it's traversing across the structure. So that's what the volume profile says, but it's still so far away that it's difficult to, I'll just say it's difficult to believe. All right. So Tim's saying, and I may have missed it, but how does volume look on the ES and SPX? Well, first of all, there is no volume on the SPX because it's an index, and the index is not actually traded, so there is no volume. We always have to look at the ES, the E-mini S&P. Now, the price differential between the ES and the SPX is only a couple of points. So for all intents and purposes, we're looking at the same index or the same asset. And who is the moderator administrator? What's the website? Hold on. Had to hit the cough button there. All right. Apparently somebody new. Welcome, Vasil Stana. I am the moderator, administrator, owner of 0 Days to Expiration at 0-DTE.com. And we have a group of about 600 plus traders, and we trade the final day of expiration on the SPX, on the index. Whether it's the E-mini S&P futures or the SPX index itself, the options on those, we play the very final day of expiration. We have found edge in collecting premium on that last day, and we employ our analysis through volume profile and my head is just so stuffed, it's hard to think. Macroeconomic condition. From there, we can ascertain the behavior or the expected behavior of the market as it traverses across the market structure left by the volume profile. And then we use that to model our trades. We have two different types of trades, one where we take one a little bit earlier in the day, looking for a little bit more premium, a little longer range, a little more relaxed. And then there's this final hour trade that we're doing right now that I show live and will be showing live for the next, the next 30 days. For us, this is an experiment. It's new to us. We've been doing the other trade now for a year, and we recognize that there was a lot of opportunity. This is our 20th instance here. Actually, I think it's the 21st, but we're 16 out of 20, which gives us about an 80% record that we've done here online. Yesterday, we had a trade where we pinned the trade, and most people made in excess of 300% return on their capital in under an hour, probably in about maybe 45 minutes or so or less. So that was very exciting. That's our, I think, since we've been starting this, that's about our fifth. You could say stretch it and say sixth, but I would say fifth pin, or something that's close to a pin trade that we've been doing since we've been broadcasting this trade, the final hour trade. And so that's what we do. That's what we do. All right. So Mama Cash is she just took one at 37.75, 20 wide. I also have that same trade on. When I got in at 60 cents because I took it a little bit ago. Mike B, rather than trying to catch the knife, how about a vertical? No, there is no hope in a vertical. There is just way too much risk. We're not into taking that kind of risk. We've been doing this for a long time, and the best risk to reward, the best chance that you have, the best positive outcome is to use an out-of-the-money butterfly and use that risk to reward feature, to control your risk. A vertical, yeah. Plus, even if you were to put the vertical out of the money and you would say, well, it's the same thing as a butterfly, but it's not. You have a very different profile of the P&L line on a vertical than you do a butterfly. The butterfly actually works for you as you approach the structure, where a vertical, you're always fighting against it. So there's really, the vertical is just a non-starter. We've gone over this many times. Let's see, who else do we have here? Damien. He has a 38.15, 38.30, okay, 38.15 short strike, 15 wide. That might be a very good trade. You don't know. We're coming down here. Let's see. Let's go and zoom in on price and see where we're at. What did you pay for it? That's the question. What did you pay for that trade, Damien? So this is the trade that I'm talking about. You're not way off. You're right in the ballpark, man. Right in the ballpark. So Timid said, and I may have missed it, but how does volume look on the ES? How does it look on the strikes? Oh, I see what you're asking. The options chain volume and what strikes are giving us the best volume. That's what he's talking about. Of course, there's volume on the SPX and the ES on the options. Sorry for misinterpreting that. So let's go and we'll take a look at that volume chain. Or that, I'm sorry, the options chain. Again, my head is still all stuffed up. All right. I'll go over here. Here's the options chain. And our big strike here is at 3,800 on the put side. And then we have a number of different strikes that are pretty powerful at 38.30, 38.10. So hopefully Damien's trade is well situated. And on the call side, we do have 38.50 at 12,000, but that's still just a fraction of even, most of these lesser strikes on the put side. You really have to go all the way out to 3,900 before you start seeing any significant volume on the chain on the call side. So the put side definitely has it. And, that's not surprising. 65,000 shares on 3,800. Something tells me that we're going down. Something tells me we might just zip right past that. And Damien, if we zip past that, if we start moving down fast, get your finger ready to collect that profit. So we're at 20 past the hour. again, I would say that the primary call has got to be 3,800. You could make an argument for a 3,820, but it would have to be a really narrow one. You don't want to spend too much money on that. So, for instance, if I were to put one at 3,820, I want to control that risk. So I want to be, I don't know, 10 wide. Let's see what a 10 wide would do. All right, that'd be $1.10. So $1,000 minus that. So that'd be a dollar, a little over $1 to make 800, or to make 900. A 1-to-9 risk to reward. That's not bad. That's not bad. That would be, I think that would be an acceptable trade right here. Because look, if we start moving down fast, the worst that's going to happen is that you exit when we hit the center strikes and make yourself 50, 60%. If we hang out and stay right around here near the long legs, then price or decay is going to continue. The profit line is going to rise, and without even getting into the profit tent, you could easily make yourself 200, 250% return on your money. All right. It doesn't matter if it's a debit or a credit vertical, Mike. It really doesn't matter. They act exactly the same. A debit vertical and a credit vertical are exactly the same. There is functionally no difference other than the fact that one is a debit and the other one's a credit. They have the same risk to reward. Everything about them is exactly the same. In fact, you could, you'll have the exact same profit and loss. Everything about it is exactly the same. So it doesn't really matter. All right, here we are. So this is sort of my experimental trade here at 38.20. I'm thinking that we're going to come down towards 3,800, and if we go past that, I'm going to say, hey, let's sell right at 38.20. Still a lot of time to go. A real lot of time. No broken wing butterflies. Way too much risk. Way too much risk. So what are you going to do? You're going to put the long spread, the bigger, wider spread further away from you, and how far away are you going to put it that's going to assure that you do not run into trouble? Besides that, your profit curve is going to start dipping away from you, and it's going to make it much more difficult. It will require you to get deep into the trade and risk going to the dark side, to the abyss. So a broken wing butterfly just does not work. The only thing that works, and we've been through this, I don't know, with hundreds and hundreds of trades, a symmetrical butterfly. Symmetrical butterfly is the way to do it. Out of the money, aligned with our market structure, and the appropriate width with the right risk to reward characteristics. That is the way you go. That works. It's tried and true. It's simple. No need to do anything else. We do no management at all, because really the risk that we take on is the risk that we spend on that trade. You know, if we're only spending $80, $90, $125 to make 10 times that money, we're not going to sit there trying to manage our risk. Instead, what we're going to be doing is managing our profits. That's what we're most interested in. That's where the money is. That's where the positive expectancy is. not in managing your risk. With a broken wing fly, you would be managing your risk, and you would be putting yourself in potential peril. As a matter of fact, the thing, we were burnt on this. We put a broken wing or the long spread far away from us, and it would have taken a 3.5 standard deviation move for it to challenge the other side of our fly. And guess what? It went 3 3/4 standard deviations. And it challenged it, and it screwed us. And then it did it again. This idea of putting high probability trades on and expecting to have a positive expectancy in the long run is just a non-starter. You're going after much smaller profit, much greater risk, and you have to take profits early. You cannot manage profits, you have to manage risk. Everything about a broken fly or an iron condor or a vertical, you're always working to try to manage your risk. You're working to try to not lose too much money. We never do that. We are never focused on not losing too much money. It is baked into our trade. We are focused on how much money we can make. And that's it. It's a fundamentally, diametrically opposed way of looking at trading than what most people are doing with their trading. All right, let's see. Let's come back to the big head here. I should keep the chart up there because then you don't see me like get all choked up and then have to push. That was the cough button right there. And still clogged up. Can't get rid of this. And I never get sick. True, I had COVID in the beginning of 2021. But before that, I went at least 20 years without so much as a cold. Nothing. And so I got COVID. Deathly ill from that. And then I caught this last week after going to a wedding in Ohio. Not going to Ohio anymore. All right. So let's take a look at the market, see where we're going. It looks like the market wants to evacuate from where it is right now. But I don't know. It's hard to tell. It came off the bottom, a little bit of a bounce, then a bigger bounce, then came back down, then a bigger bounce. I don't know. This could be turning into a big bear flag. That it has that shape to it. Yeah, let me draw it. Do we have something? Yeah, we can draw a triangle around that. See, it's like this big bear flag. Something like that. Let's see if that works out. Big bear. It might just break up here and start going up. I don't know why. Because this economy is in shambles. Inflation is off the hook. We are going into the weekend, though. And, some of those Wall Streeters, I'm sure that, they want to get down to the Hamptons and get naked with Buffy. Oh, I'm sorry, this is a family show. And so they're thinking, I was really planning on picking up another Tesla or another Lambo, and we can't have this total collapse of the market today. So whatever it is, it's, it's trying to recover, but I don't know if it will. You still have half an hour to go. So each time it's sort of reached back up and then fell back down, reached up, fell back down, reached up, and will this be that third time's the charm? Does does it really look like this or something? I don't know. I don't know. We'll take like a big, see, this is a big pennant. Why is that extending? I didn't ask it to extend. We don't want that to be extended. So if this behaves like a flag, then it might do something like this. So Omar is a troll. He came into our service and tried to disrupt it, and now he's trying to discredit everything. Obviously, 2 days there and tried to troll everybody what was going on there. So we really don't care what Omar has to say. As a matter of fact, Omar, you're gone. Thank you. So since I opened this service, as you're probably aware, when you have an online service, you're going to have your share of trolls. I've been very fortunate that in the past year, we've only had maybe 3 or 4. And now Omar left on his own. Now he's coming back. Obviously, he doesn't want to, he doesn't feel like his work is done yet. But there have been 3 other people over the course of a year, which is not bad when you consider that, going through about 1,200 people, that you only get 3 trolls. And trolls, I don't know what their deal is. They want to disrupt. They want to inject their opinions. They want to bring you down any way they can. It's a sad existence. It really is. So anyways, enough of that. So Mama Cash says big traders closing their shorts into the weekend. Yeah, I think that's what's happening. I think they're saying, we got to get back to work here, the work of leisure, and get back to the weekend. The Lambo is all warmed up. We got to get back. The call is, there really isn't a call, Lance. I put out something that I said, maybe 38.20 or something like that might be to do, but really thin, narrow. I don't want to say that we're going to have an official call today, because on a market like this, it's just too erratic. There's just no way that we can plan out a call here. I mean, we've dropped over 100 points. Now we're recovering somewhat. Why? Who knows why? It's this is just not the day to trade. And that's part of what we do. Even on a non blowout day, there are times when we don't get the kind of risk to reward that we're looking for. If we don't get at least a 1 to 5 risk to reward, we won't take the trade. And so there are times that we'll just skip those days and move on to the next day. We don't hold any attachment to any one trade. So I feel that way about today. And we were like that this morning too. We were saying, hey, this is a lottery ticket. Put something way down there, put it on the nice big round numbers, and maybe it will come down near it and you can whip it off and take a few dollars of profit. But that's not really trading. That's just winging it, I guess. And that's because when a market moves this much, I don't know how you trade something like that unless you had the forethought to put just a pure short on. But nobody knows that that's what was going to happen. I felt like today was going to be a bearish day, but I wasn't thinking 140 points. I was thinking, well, maybe we're down 40 or 50 points, right? And then it just turned into something very different. So I would say that right now that it's recovering, we might be able to take a trade, going into the very final part of the day. So Peter's saying, here's what Peter's saying. Peter's saying, we're headed for the same close as yesterday. You said that this morning, Ernie. Yes, I did say that. I did say that. I said that we would be heading for the same close as yesterday. Wouldn't that be funny if it turns out that way, That was part of my analysis this morning, that we were going for the same close as yesterday. Of course, I threw that out the window once we started to drop, so I'm not going to take, some credit or pat myself on the back if that's where it ends up. I was thinking that, if we dropped a few points, that it would probably end up back where we closed yesterday. Cough button. All right. What did we close at? 39.05 yesterday. Right around there, 3,900. Wouldn't that be interesting if we did? Let's see, where was that? 1,600. Well, the ES closed at 38.94. It looks like it's hard to tell. Somewhere around there, 38.95. Right in this little cluster right here. Why not a bearish and bullish trade? Well, I guess the argument could be made, well, why don't we do that every time? And the reason is that, well, then you would be giving up a lot of profit. And you wouldn't, if you started doing the math, you just wouldn't have the same kind of expectancy. I don't think so. And we've done that before. We call that the Batman trade. And it's worked out for us every once in a while. As a matter of fact, one time we hit the Batman trade on one side and then it reversed and then we hit it again. But as a general practice, I don't think it's a good idea. You make your bed and you sleep in it. You take your trade, you do your analysis, take your trade, take your best shot, and then if you don't get it, you move on. That's as simple as that. Like I said, we do not want to be attached to any single trade. Treat every trade as if you're building a house, right? You're building a new house and you've got all the nails. Every nail is like another trade. Bang, onto the next one. Bang, onto the next one. Bang, oh, I bent it. Pull it out, put another one in. Bang. That's what it's got to be. If you labor over every single trade like that and expend that kind of energy, you're also expending money. And that never really works out. Keep it clean, keep it simple. Each trade is an individual trade, totally not attached to it. Trade it. If it works out, great. If it doesn't, move on. All right. So we're heading up into this little volume well here. I don't know if you can consider it a volume well. We'd have to bring in some more. See where we're at. So it's going up for the T0 node. That's this node up here. So T0. We're past this LVN. We bounced off of this LVN, past this LVN. We're going for T0. Amazing, amazing recovery. Was there something in the news that that caused this recovery? I don't know. I don't know. I think, let's see here. All right, there's the close from yesterday. Get this out of the way. $38.97. So on the SPX, that would be just about 3,900. And we're kind of close to make that kind of trade right now. You know, let's see how that would work out. Let's see what the options chain is looking like. So right at 3,900, we have 33,000. That, just a few minutes ago, that was only at about 21,000. So that has grown significantly in the last half hour. So that's how much the situation can change, like change in a heartbeat. We were only at 21,000 contracts when we started this just about a half an hour ago. And now we're at 34,000. That's incredible. And then we just left all this up. I mean, we had 69,000 at 3,800. And we were within 8 points of it. 8 points. And then it just totally reversed and said, nah, I'd rather do 3,900. Don't like 3,800, like 3,900. And it has far less contracts, far less volume, half the volume. But that's what they wanted to do. So, you know, yeah, it is a big rally. I don't know. There's not much you can do in situations like this. You got to look at it and say, yeah. You take a little bit of a chance. You don't put big risk on, and you try to catch that wave and get into the profit zone. With that, you know, we're able to, okay, so this is, we didn't take a trade, so we're still 16 and 20. It's the first time we have not taken a trade. See, now we're at 35,000. Wow. We've pulled back a little bit. Yeah, I don't even know if we're going to put a trade on right now. What are the odds here? Let's take a look at the volume profile. We'll zoom in on this down to the 3-minute level. That's quite a reversal there. Certainly wasn't a bear flag. It broke out of that. It was more like a wedge, and it just broke out. I don't know. I don't know where I would put a trade. Would I put it down at this LVN? Should it come down here and bounce off that again? It bounced off the bottom of T0. It blasted through this LVN, bounced off the LVN way down here, blasted through this LVN, and then bounced off of T0. We're in the kind of the middle of no man's land. I don't see great odds for us. I'm sorry that this disappoints some people, but I can't call a trade here. Cannot call a trade here. Now, wouldn't that be spectacular if it in the waning minutes, in the 15 minutes, it dropped all the way back down here? That would be so cool. But I don't think that's going to happen either. I think we're going to come up to T0 and then kind of maybe close right there. And then in the after hours, the last few minutes of the market, it'll drift for the last hour of the market, maybe drift a little higher or a little lower. I don't know. So sorry, Swede, we're not doing a trade. See, this is the nature of, catching the falling knife. You got to either get in the game and play it like you mean it, or don't play at all. There's no halfway. There's no tiptoeing through this. And to me, there was just too much risk. I mean, even with our small risk, there was, I don't know where you would put it. I don't know where you would put a trade. It would, if I put it above price, it could have blasted through it. I put it could have blasted through that. Or just reversed, who knows? All right, so let's, should I bring this right into the close? I mean, is there any good reason to do this? Here, let's turn on the big head here. All right. Plus, I don't know if I can talk for another 15 minutes or 13 minutes. Got to give the throat a rest. So let me tell you a little bit about the service. This is a coaching and mentoring educational service where you will learn how to trade options, whether you're a newbie trader or a professional. You're going to learn our strategies, methodologies, and our process that we use, which is an agile-based process where we time box everything, iterate over it, have retrospective meetings at the end of the week. We have multiple live streams throughout the week. There's it's mostly trade on Monday, Wednesday, and Friday, coaching and mentoring on Tuesdays and Thursdays. It's a fantastic service. The traders are very happy. It's a great bunch of people. They all support one another. And you can go for the 4-week trial. Go to 0-dte.com/try. 4-week trial. And in that 4 weeks, you're going to learn our strategy, our methodology, our process. You're going to be treated just like any other member, full-fledged member. And most people will make enough during their trial to pay for actually multiple years of the service. So there's that. Plus, you're going to learn a completely different way of trading, an inversion of risk, where we're not focused on managing our risk, we're focused on managing our profits. It's a much more comfortable way to trade. Because you're not trading under any kind of anxiety, your head is clear, and so you make clear-headed decisions. Voice is starting to go. And so for that reason alone, I mean, it's just a wonderful way to trade. When you make clear-headed decisions, you trade better. And then on top of that, having the mentorship and the coaching to keep you accountable, it's really a great winning combination. You'll learn a lot in a very short period of time, and then you'll keep on building and building and building until you get to some level of masterhood. So Whoa, there was a big jump in the price. See? What are you going to do with stuff like that? Look at that. It dipped way down and then just took off. So that was like went down to 38.73, and now it's all the way up to. So it was a 24-point move in just 4 minutes. How do you trade that? I don't see how you trade that. So this weekend we'll have our retrospective. I may broadcast that to the public. I do that every once in a while so that you can see what the inner workings are of our group. And then we'll get to the business of trading the 0 DTE again on Monday. But right now, not much to do. It was a nothing day. It was kind of it was almost like taking a field trip before the weekend. We're saying, hey, it's too nice of a day to really trade, or the market's just dropping off of a cliff. Let's just go out and just throw some pennies into the fountain, or play some pachinko or something and see if we can make a few bucks, and then we'll go home and we'll take it easy and we'll come back on Monday and trade again. That's what today was. Today was I won't even say a mental health day, because every day because of the nature of this type of program, this type of trading, this program, every day is kind of a mental health day. I mean, you're able to really separate yourself out from the strategy and the tediousness of the various things that you have to learn. You can focus on your fundamentals, get them down really pat. One of the most important things that I emphasize with people is that you really have to know your trading platform. And you should be spending the time because that's where most of the mistakes happen. Although I'd say that some of my biggest trades ever were on mistakes I made because of fumbling around on the trading platform. But you should really have mastery over your trading platform before you think that you can start mastering a strategy or a method. And so that's what we do. We constantly focus on those fundamentals, the individual methodologies that we use to analyze the market, to analyze market structure, to create and model asymmetric trades that fit on top of that market structure, and then execute those trades. And then we're in the manage the profit mode, not the manage the risk mode, where we're in a very, very different place than most other traders. Like I said, very relaxed, no anxiety, waiting for the right thing to happen. If it pins, it pins. If it doesn't, it doesn't. Take good profit, move on to the next one. That's it. All right, so now we just gave up. Of that 24 points, we gave up about 15 of those points. Yeah, this is crazy. This is crazy. 7 minutes to go. I don't know what to do. Yesterday, everyone's hanging on by, with their nails, biting their nails, because we're sitting there inside of the profit tent and we're going back and forth, back and forth. We're almost pinning, almost pinned, then, and then finally, it was just a fantastic near pin day. Not one of our best pins, probably returned on average about 350 to I'd say up to 500% for some people if you get out in the right time. There were some places where you could get out where you could have made as much as 750%. If you had held it all the way to expiration, I think you would have ended up around 325, 350 or so. So, but still, that's a great return. And that was worth waiting right to the very end. This one, we're not even doing anything. I'm just rambling on here, trying to keep your attention. So I'm going to say that's enough. We're going home now. See, I want to hear the bell, but I don't want to wait for 5 minutes to hear the bell. Ding, 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 ding. There you go. Peace to everybody. I hope you have a great weekend, and we'll see you on Monday for another final hour trade. I hope you have a great weekend. Take care. Got to find the off button. There it is.